Hi everyone. Welcome to CoinGecko's 20 virtual meetup number 20. This is our first meetup of the year 2023. So good morning, good afternoon, good evening, wherever you're joining from. Thank you so much for joining us today. My name is Zhong. I'm the head of research here at CoinGecko, and I'll be the one to kickstart this meetup. And then after this, we're gonna hand it over to Bobby and our esteemed guest that's joining us slightly later. So um, before we start, I just want to thank our sponsor for today. So this virtual meetup is brought to you by KuCoin. So thank you again, KuCoin, for continuing to support us even during the bear market. Yeah. Like I said, I think agenda for today, I'm going to quickly run through this report that we just published 2 days ago. This is the 2022 annual crypto industry report. And I'm going to be quick. I'm only going to take up about 30 minutes of your time. And then what's going to happen is I'm going to hand over to our co-founder and COO, Bobby Ong, who's going to moderate a panel session with three esteemed guests that we have. Alex from Nansen, Adam Cochran from Cineheim Ventures, as well as Kelvin from Impossible Finance, and they're going to talk about what were their views on 2022 and a bit of the outlook for 2023. So without further ado, let me just jump straight in. Obviously, this is not the full report. The full report is about 50 slides. So if you're interested to read that, you can go to our website, coingecko.com/research, or you'll see it right on the front page itself. At the top, there is a banner that takes you to the report itself. Again, I want to thank our second sponsor. So the report for this round is actually sponsored by 1inch. So thank you again, 1inch, for sponsoring this report. Let's get straight into it. And I think we always like to start by looking at where the total market is after 2022. Obviously, it's a bit outdated given that we saw quite a bullish run up in the last, I would say, week or 2 weeks, and we're now back closer to the 1 trillion, I guess, sort of mark here, right? So you have seen, like, we ended the year at about 829 billion in total crypto market cap, and that has now gone back to about a billion, which pretty much sort of marks the recovery of the market from the FTX collapse. So when it collapsed around here in early November, we were really looking at about a trillion plus market cap, and we're pretty much sort of retraced that in the last couple of weeks. So I think fingers crossed. I think everyone is hoping that we can actually find support at these levels, and and maybe even go higher from here as the markets turn and stuff like that. But safe to say, I think, coming back to the presentation, we started 2022 at 2.3 trillion, and that was already down from the peaks in November, and it sort of have just went down from there, pretty much in a straight line basis, and we ended about 64.1% lower. I think in reality, if you look at the shape really of the green color chart, which shows you the total market cap, you'll see that we actually did most of the we actually took most of the losses in the first 2 quarters, right? This is obviously coming from Terra Luna, and then sort of it's actually been pretty okay until we hit FTX, right? So this looked like a pretty decent shape until we hit FTX, and we took one more leg down and hit actually the yearly low at about 821 billion US dollars before making like a small recovery, or I would say actually pretty flat to 829 billion. Yeah. One of the other things that we like to pay attention to, as you guys are probably aware, is trading volume across spot exchanges, and that has also actually seen a pretty steady decline throughout the year. I think no surprises with bear market, with a lot of people starting to be put off by losses. Average trading volume actually for Q4 now sits at about 59 billion US dollars. That's a far cry from, I think, the start of the year, where it was closer to 100 billion. So this is like 24-hour volume, right? So we're talking about 24-hour volume. In the start of the year, at least, I think you would still expect to see close to like 100 billion in trading volume, and we're pretty much down to about 59. Obviously, we saw a bit of a recovery when there was this pump in the last 2 weeks, like I said. But overall, I think it's still low, and we still haven't really retraced those losses, at least in terms of like trading volumes and liquidity in the market. Some notable mentions. This is obviously total market cap, but I think we're going to talk about Bitcoin and Ethereum after this. But I just wanted to point out Matic Polygon has successfully broke into the top 10, and OKB, which is the token for OKX, the exchange, actually jumped from number 21 to number 11 in the last quarter itself. I think largely thanks to Elon Musk talking about them following them on Twitter. Obviously, two of the big stories of 2022 was Luna, Terra Luna, and FTX, and there's no surprise that Luna has fallen off the top 10 together with Solana, which is heavily linked with FTX. So they're as of this chart anyway. I know Solana has recovered by a bit, by not that much, but yeah, they've fallen by about 90% since the start of the year. Yeah. Let's move on and talk about stablecoins. I think in a bear market, it's actually pretty important, and they play a larger and larger role in our market. Actually, if you looked in our report, it's not on this chart, but if you looked at the overall dominance metrics, stable coins, USDT, USDC, BUSD have all increased their overall dominance over the market, even though BTC dominance have largely stayed flat. Yeah. So stable coins, as you can see, didn't suffer as much as the market. They only down about 16.6%. Actually, a lot of it really came from UST, right? The algo stable associated with Luna, and really once you saw this dip here when Luna and UST collapsed, it pretty much have been I would say pretty stable, and taking slight gains at the end of the year, but yeah, pretty stable. In terms of who's leading the league table, I guess USDT is still the undisputed leader in terms of market cap with 66.2 billion, even though that actually represents a 15% decrease since the start of the year, right? So we also do see USDC slowly but surely catching up. They increased by about 5% in market cap to 44.5 billion. So they used to, if you can remember, they used to be about half of what USDT was from a market cap perspective. They're now slowly closing this gap. They're about about a third behind now. There was a lot of hype around BUSD, particularly at the end of the year. And that is also reflected in their growth in market cap. You'll see that they're actually the largest gainer in the top 5 with 14.7%. They grew by about 2 billion in market cap since the start of the year. But as you can see, I think comparing to USDT, USDC, they're still quite far away in terms of market cap, and it remains to be seen whether they can actually squeeze themselves into becoming like a top 3 instead of just a top 2 in terms of stablecoin market share. Otherwise, the other 2 decentralized stablecoins, DAI and Frax, actually took significant gains. I would say close to 40% of their market caps, respective market cap, is down from the start of the year. Frax in particular is hovering at the 1 billion mark and really in danger of falling off of that. So it's not been a good year for them. Otherwise, I would say from a total stablecoin market perspective, I think just to highlight a few things. So USDN, the near base stable, fell out of the top 15 after the banking in November, while obviously, talking about stables, we have to talk about USDD. The Tron algo stable now sits at number 8. They have about 700 billion market cap since June, right? And it's been pretty stable since then. So it'll be interesting to see what happens with USDD. Obviously, we're watching it closely and seeing what Tron and Justin Sun does with USDD, right? We do see incentives as starting to tail off a bit, so that we'll see whether that will affect its total market cap. But also at the same time, I think there's been an announcement that Huobi will actually support USDD as its trading, as its main stable trading pair. So it'll be interesting to see how that goes. Yeah. Let's get into Bitcoin, and I think this is a chart that probably brings a lot of pain to most of the audience listening in. BTC, we chart BTC against all the other major assets in the world. You'll see things like crude oil, right, and gold, and obviously all the other major currencies, US dollars and stuff, but also equity market like S&P and Nasdaq. So yellow line is Bitcoin, orange line is Bitcoin, right? And really it was the worst performing asset in 2022. I think compared to the other benchmark assets that you see on the chart, it's like we said already down 64%, even though it's starting to recover a bit. But actually, if you look at the rest of it, almost everybody else is underwater except obviously the US dollar and crude oil, right? Which managed to stay above water in 2022. Even we talk a lot about the DXY, right, the US dollar index, but really I think they also started to decline at the end of the year, right? I would say the peak was around here in mid-October, going into November, and then sort of as the market started to turn, as people started to become more bullish or thinking that the Fed will become more dovish, really, the DXY started to come down a bit. Yeah, and similarly with crude oil, I think most of the gains were at the start of the year, when war in Ukraine broke out, and people were coming out of COVID, but really it's also similarly come down and really just managed to stay above water in 2022. The other thing we really want to talk about with Bitcoin is hash rate, because I think a lot of people have been worried about with the prices declining by 60+%, 64%. Where does this leave Bitcoin? And to a certain extent, I think credit to the Bitcoin community and credit to the developers and the miners and the people who are maintaining the chain. Bitcoin has, as you guys know, like no news is good news for Bitcoin, right? It's largely stayed stable and operating throughout 2022, right? Despite like a 60% decrease, like I said, in price. And if you look at the chart, actually, from a mining hash rate perspective, it's actually grew by 54.5%, and even in the last 2 quarters, it's actually been in the green, right? In Q3 you can see it's grew by 4.8%, and in Q4 it grew by 5.4%. At one point it hit its all-time high at about 316 million terahash per second. Obviously at the end of the year it came down a bit, but you'll see that actually it's sort of already started to recover as well. So I think we remain pretty confident that this will hold up. Despite all the news, I know people are going to point to things, players like Core Scientific, Argo Blockchain, and some of these who have run into trouble, right? Near the end of the year, you have seen Core Scientific had to declare bankruptcy. They had to get a loan from one of their shareholders, BlackRock, to continue operating. But nonetheless, I think given the nature of Bitcoin mining, right? Mining machines are typically quite portable, right? And they are quite easy to plug and play, so to speak. Like you can quickly move it, plug it in, and start keeping it up. We don't actually see a big hit in hash rate moving into 2023, and I think we're going to see these machines migrate, and perhaps it's new players come into the market to actually pick up the slack and keep the network secure while also continuing to earn rewards from mining. Yeah. Moving into Ethereum, I think one of the big events of the big event of the year for Ethereum really is the merge, right? And I think kudos to the Ethereum developers, core devs and everyone involved. Again, it managed to get pulled off without a hitch sometime in August, and that really was a monumental event for not just Ethereum but the crypto industry as well. And you have seen, like, I think the other EVM chains, some of the other EVM chains have also announced similar steps. I think after seeing that the Ethereum core devs having proven that it can be done, right? You could actually pull off like a consensus algorithm migration, without anything going down and with things staying up and really without a hitch. So I think really kudos to the team who has been working at this for a couple of years. Obviously, one of the key things coming out of the moving to proof of stake is obviously staking, right? And this is a chart that we've showed for a couple of quarters now. It really shows you, the amount of stake ETH that actually is staked in the protocol. Some of you will know that actually, at the moment, even though the migration to proof of stake has succeeded, you don't actually get to withdraw, right, your stake ETH from the protocol itself. That's actually coming in the next upgrade called Shanghai, that's scheduled to come in March. Nonetheless, I think you see from the chart actually, in anticipation of the merge happening, like I said, sometime in August, it really has grown throughout the start of the year, plateaued off a bit, and now you're starting to see, I think, quite interesting. So post merge, I think it also gave people more confidence that you could stake, and it will remain safe. So we see that stake ETH has still continued to grow. Even at the end of the year, even in Q4, in fact, it recorded one of the highest double-digit growth in Q4. And I know the number now is about 16 million ETH staked. So Shanghai is going to come in March, and that's going to be interesting because that means people can start unstaking. Obviously, right now, Lido is in the lead, and then we have Coinbase, Kraken, and Binance following. And it'll be interesting to see. I mean, this staking, some of the maxis will probably have started even as early as 2021, for example. And it'd be interesting to see if we see a reorganization of this lead, right? So right now, like I said, Lido is in the lead, but whether people actually move into Lido or move into one of the other liquid staking derivatives like Rocket Pool or Stakewise, or they actually stay or increase their stakes in centralized exchanges. So I think it's going to be interesting. I think a lot of you guys would probably have noticed that we have seen a lot of activity with LSD, so liquid staking derivative coins like Lido, RPL, Stakewise. And I think people are sort of taking positions on, which of these LSD protocols will actually benefit from the Shanghai upgrade that's coming in March. The last thing I want to talk about Ethereum is really around MEV. I think this is a term that may not be new to people, but you may not know what it is really. So this is actually something interesting that's coming out of the move, the upgrade, and is actually gaining more attention and more interest. So we decided to highlight it this round, and sort of because I guess also thanks to our partner Eigenfi, who very graciously have provided this data. Previously, it was not so easy to sort of visualize this information coming out. But I think quite interesting. I think across 2022, you see 120 million in profits generated by MEV transactions in 2022. And you can see actually it's pretty stable throughout the year, right? You can see that from a MEV volume perspective, it's pretty stable, except for months where we have significant activity in the market, right? So this is obviously when Terra and Luna collapse, and this is when FTX happened. So you see, so the more volatility there is in the market, typically that's when the MEV bots actually have the most activity as well. So no surprise there, right? There are typically three types of MEV transactions: sandwich attacks, arbitrage, and liquidations. And you can see that that's on the slide. I wouldn't bring them often throughout the whole slide. I would say probably the most interesting things is sandwich attacks are probably the most common that you hear about in terms of MEV. But actually, they do produce actually the lowest profits. So there's a lot of from a profit margin perspective, they're actually the least profitable at about 27%. Arbitrages actually take the most of the profits, so they're pretty profitable. But really, the big chunks of profits are actually made by liquidations, and you see this happen, particularly in May and June, where a lot of leverage was flushed out of the systems. The liquidator bots actually absolutely make a killing down here. Let's move into DeFi. I think just to point out what has sort of happened. I think DeFi, I think more than the price of the tokens, which have also significantly declined. I think I like to personally look more at TVL, right, as a measure of DeFi health and where the market is. And really, I think, TBL has taken a significant hit since 1st of January 2022, declining by about 73.2%. There are a few contributing factors. Obviously, the decline in the price of tokens and stuff like that. But also, I think to highlight is obviously we have seen a lot of hacks and exploits as well throughout the whole year in 2022, and that has also resulted in loss of TBL from DeFi protocols. Yeah. No surprise here, I think, to see that Ethereum has pretty much maintained its dominant position, or maybe perhaps it is a surprise. I don't know. That Ethereum has managed to maintain its dominant position, at least in terms of TBL share, throughout 2022, and really it's sort of kept that position, I guess, by declining less than everybody else, right? The big surprise, however, is Tron, right, which is really come from nowhere. You'll see this is the red section here, and following the collapse of Terra Luna and the launch of USDD, has sort of grown their share of market cap. Sorry, their share of TVL really off the back of USDD alone, to now be neck and neck with BSC, with BNB Smart Chain, to be the sort of like the joint second chains in terms of TBL in Q2. However, we are slowly seeing some decline as like I mentioned earlier, some of the incentives for USDD start to fall off. Otherwise, I think just to highlight some of the rest, really the other ones that are on higher up on the rankings are EVM based chains, so things like Polygon, Arbitrum, surprisingly Phantom, still having decent traction, right? But other chains have really fallen quite far behind. So when you look at this yellow bit, which is others, right, it really makes up of 149 networks. That includes perhaps very popular chains, or chains with some hype behind it, like Aptos, Harmony, and Canto. They really are not that significant yet from a TVL perspective. The other one I will point out is obviously Solana. This is the dark blue line that's on top, and you can see it really is gradually declining, and really having fallen behind a lot of the EVM chains that I already mentioned earlier. And you may ask, what sort of is the other reason for driving this TBL decline, right? And I think this is one of the interesting charts that also we added this year, I think, which is really relevant to the macro environment that we find ourselves in. Obviously, you are aware that the Federal Reserve has been raising their interest rates, and this has also forced other central banks to also follow suit to raise interest rates. So it's not the highest it's ever been, right? But interest rates have significantly increased for the TradFi market. Ever since this 2022 started, right? The Fed has really been aggressive, and you can really see it in the chart, right? So it was zero or near zero, for almost 2 years, I would say, and before rising pretty rapidly to now about 4. This is the 1-year Treasury bill rate for the US, and this is about 4.47%. Now, conversely, right, this is the blue line is really stable coin interest rates, and we use data from TT Tyler, and these are essentially rates for USDC, USDT, DAI, on RV and Compound, and you really see from January 2021 is really been on the decline, and right now actually the rate is about 2.89%. Which is actually below the US 1-year Treasury bill rate as well. So I think this is an interesting contrast in where the market is now. You actually are getting more return from holding Treasury bills than holding stables in parked in a lending protocol. So I think it is a reflection of where the market is as well. Let's move on, and I'm going to move slightly quicker because I'm running out of time, into NFTs. I think NFTs probably the worst hit of all of the different sectors, simply because it really hit its peak in January 2022, right? So January 2022 was the absolute peak of of the NFT market, and pretty much it's been downhill from there. And that's why you see it's recorded a 93.2% decrease in trading volume from January. But I think, just because there's a decrease doesn't mean there's no excitement in the market, right? A lot of this came from Magic Eden, really popping up and coming out of nowhere on the back of Solana NFTs, really being able to take on market share away from OpenSea. And while OpenSea has also branched into Solana, they have not really been able to capture much market share. So where we are at the end of the year is actually pretty interesting. So OpenSea's, even though OpenSea, arguably dominates on, obviously Ethereum, Polygon, and moving into Arbitrum and BNB Smart Chain as well, they now only hold about 65.4% of the market. Obviously, that's more than half, but compared to where they were at the start of the year, it really is has been on a downward spiral. Magic Eden has, like I mentioned, has now managed to capture about 12.5% market share, and then followed by X2Y2 and LoopsRare. I will just point out that this is data provided to us by another partner of ours, Footprint Analytics. So thank you again to them for providing this data. And this data is has have wash trading excluded. We did mention the last round that there was significant wash trading happening in the market. This has also declined as rewards sort of declined, from the marketplaces like X2Y2 and LoopsRare. There are a few interesting NFT collections that really popped up throughout the year, and I think we just felt it was fair to highlight 6 here on the slide, but obviously there are a lot more that we could get to and we could mention. I think the first was really Pudgy Penguins that is one of the OG collections, and I think at the start of the year they became one of the first that got taken over by the community. I think a bit led by Luca Nets was successful taking over and have very ambitious plans for the IP. And you actually see that post takeover the floor price really has gone from strength to strength since the takeover, and I think is one of the few especially OG NFT collections that have really taken off and have thrived even during the bear market. It's hard to talk about NFTs without talking about Yuga Labs with BAYC, Punks, and Meebits. I think it feels very long ago that they actually acquired Punks and Meebits, but it was also a monumental event happening in NFTs, and with all the other stuff coming out with ApeCoin and the other side metaverse, I think whatever Yuga does will be very interesting and will be something that the whole market will pay attention to as and when they release more information on these things. Yeah. The third one is Artifact, and Artifact now acquired by Nike. I think at the end of 2021, I think their CloneX, Monolith, and CryptoKicks collections were huge hits because you could always forge what we call phygital products, right? So you have an NFT that is digital, but you could always order from Artifact during their forging season to get like the physical product delivered to you, physical custom sneakers delivered to you. And really, I think they are the ones which are really at the forefront of this trend, and they have proven themselves again to be really popular. Their CloneX Forging Season 1 collection, we're still waiting for those merch, but has been really the benchmark for other traditional lifestyle brands coming into the NFT space and looking at how they can build digital sort of experiences. Reddit came out at the end of the year, really took everyone by surprise. Just call it digital collectibles. I think that title says it all. Like, they managed to convert 3 million plus Redditors into NFT holders overnight, just by doing it really stealthily, like not calling it NFTs at all, not saying that this is on chain. But it really is proof that if you find the right product, if that's the real fit, and you really engage with the community like they did with their popular creators on Reddit, you can really get people to buy into NFTs. Instead of trying to sell people on the benefits of the blockchain and stuff like that. And I think it's been a massive runaway success, and I wouldn't be surprised that other people looking at Reddit, there will be a lot of traditional or Web2 brands paying attention to Reddit will copy this same playbook, right, and sort of roll it out throughout 2023, perhaps as part of like loyalty rewards or things like that. Um, last, we also have ENS. I think like most people would have seen this, and it really has gone crazy in 2022, especially as people chase the 3-character and 4-character ENSs. The 80% of all ENS addresses were registered in 2022, showing massive growth, but also really, I think, spawning a whole bunch of its own really subsector, right? The domain name subsector in NFTs. Right now, there is no chain that does not have like an equivalent domain name service, decentralized domain name service, and it's all thanks to ENS. Last but not least, I think we talked about how Solana NFTs really came to the market and really captured a large part of the NFT market in 2022. And I guess the representative collection now turned hero to heel is DGods, right? Which gained a cult following with the original collection, how you could upgrade them to Dead Gods, the Dust token, and with the launch of Utes closer to the end of the year. However, I think they've perhaps as a reflection of what's happening on Solana as well. They have decided to bridge to Polygon and Ethereum in 2023, and this has caused, understandably, a lot of controversy in the market. And I think it will be interesting to see what happens in 2023 with DGods, but also with Solana NFTs moving forward. Like, will they still have hype behind them? Yeah. Lastly, wanted to talk about GameFi. Obviously, a lot of it is down, but I think we still see some very interesting things happen in GameFi over in 2022. Obviously, a lot of the first gen games like Axie, DeFi Kingdoms, and Krabada, just to name a few, they have suffered significant losses, both in terms of revenue, but also in terms of active users playing due to inflationary tokenomics and worsening market conditions. I think nonetheless there are still a lot of people building games. That it doesn't go like a week or two where we hear about games launching into alpha or launching into some sort of beta that's allowed people to come into play. So a lot of people are still focusing on this segment. It might not really be played to earn anymore, but I think what actually is important is people actually or game studios are actually building games that people want to play, and then we can see how we can incorporate token elements to make it even better. And I think a prime example of that, we saw that in the middle of the year with Move to Earn, right? So things like Steppen, Genopads, Sweat, really captured the imagination, right? And really at its peak, Steppen recorded over 1 million registered users, 76,000 daily active users in May, right? And really captured the imagination. Obviously, it's all fallen off a bit, but I do think it's a good example, and you still see people use it even though the rewards have sort of tailed off significantly. Last but not least, I think we wanted to call out other chains that might not be so prominent, but is slowly gaining interest. Immutable X, which was really built as a layer 2 that it was optimized for games, and Arbitrum, which was another layer 2, right? So these have gained interest as well, and you'll see that even throughout the bear market, they have managed to still attract players to the games, even though it's not a runaway success like previously, like Axie Infinity, but they still managed to get a player base. Yeah. Let's move right into exchanges, and I'll go very quickly because there really is not much to say other than the fact that we have seen significant decline in volume, like I mentioned at the start of the year. Q4 has been brutal. We have had 3 months pretty much where total trading volume spot trading volume has set below the 1 trillion mark. Centralized exchanges still dominate. I would say they are about 92.5% of the market. It was actually even tighter earlier in the month, but following there was some FUD around Binance, obviously with FTX collapse, the share for DEXs have increased slightly, but really it's all dwindling volume since the start of the year. I think no surprise, Binance has been the biggest winner since the since the collapse of FTX, they now have about 62% of spot trading volume. Even though, yes, again, against a shrinking pie. Um, but really, I think what was the interesting trend is, other than Binance, the other one that managed to gain in market share was Coinbase, Huobi, and Crypto.com. You could speculate why. I think, Binance and Huobi are more personality-led exchanges, whereas Coinbase and Crypto.com, I guess, have a reputation for being more regulated exchanges as well. Yeah. Moving into DEXs, I think what's also interesting is, in terms of how the market share move, and this we have more to say. You see the pink is Uniswap and yellow really is Curve, who has been, moving in and out of gaining and losing and gaining again in market share, as well as they try to combat the dominance of Uniswap. Interestingly, you'll see that where Curve has had the most trading volume has been in months where there has been the most bearish, right? Where the market has been the worst conditions. This is, during Terra Luna, and this is when FTX collapsed. So I think we're speculating, some of us, and as you guys probably know, Curve specializes in stablecoin trading. So these are the times where really stablecoins become the most active, and where Curve gets the most use. So it could be interesting that this could be a signal that the market is super volatile and maybe near the bottom as well. Yeah. Finally, I think looking at perpetual trading volume, again, as you guys know, FTX was a large player in the market. They have about 10% of, or close to 10% of market share before their collapse. And after their collapse, again, Binance was the one that picked up market share. They rose by about 56% to 62%. This is the highest it's ever been from a dominance perspective for Binance, right? But nonetheless, we also saw gains for Bybit and OKX, right? They both have also seen growth in market share in December of 2022. So it'll be interesting to see how this shakes out in 2023 as well. So this marks the end of my presentation. Like I said, it's a long report. It's 50 slides. You can find it on our website at www.coingecko.com. You'll see it on the top on the banner if you want to read the full report. Thank you so much again for listening in. And now I'm going to turn this over to Bobby to continue the next session.
Hello, GM. Good evening, everyone. So we are now on our second session of the CoinGecko's virtual meetup. This is virtual meetup number 20. So we have done this 20 times and roughly once a month. The topic of the session that I'm hosting over here today is the state of crypto markets in 2023. My name is Bobby Ong. I'm the co-founder and COO at CoinGecko. Today, I'll be moderating this panel, and we have three distinguished guests today. We have Alex Swanwick, CEO of Nansen, Adam Cochrane, founder of Sinonhain Ventures, and Kelvin Chu, co-builder of Impossible Finance. Welcome, all of you guys, to the CoinGecko virtual meetup. Thank you very much, Adam, Kelvin, Alex, for joining us. So I think before we jump straight in, I think I'll give you guys a few minutes to introduce yourself, what you guys do, what's the project that you're working on, to the community that we have here at CoinGecko. Yeah, so maybe Alex, you want to go first, followed by Kelvin and Adam.
Sure. Hello, everyone. My name is Alex. I am the CEO and one of 3 co-founders at Nansen. Nansen is a blockchain analytics platform. Increasingly, we're doing more things than that. We have a product called Nansen Portfolio, which allows you to track your holdings across 45 different chains. We also have a research portal that has been getting a lot of popularity in the last few months. And we have an exciting new product that I'm not going to say what is, that's going to launch in the next couple of months. But yeah, happy to be here.
Nice to see a lot of familiar faces here today. And yeah, hey, Calvin here from Impossible. We're a decentralized venture builder as well as accelerator and launchpad, doing a lot of stuff in a lot of different places. So maybe our stuff is unfortunately too transparent, so I can't hide anything of what else we're coming up with next. But have been thinking a lot about things about trying to kind of approach the early stage investment side of things and give every regular user a chance to have a piece of the pie. Previously was at Binance for about 3 years, helping build up the listing and launchpad due diligence process. So it was quite a journey. And I think some of the stuff that we'll talk about today will touch on a lot of the things that we've seen over the many years that all 3 of us have been in crypto, ranging from some of the staking LSDs that we're seeing. It's kind of fun. And I think we'll probably touch on this later that at one point when I was running Binance staking product, we had 71% of all Tron. So earlier, Zhong's segment around Tron dominance, I think that's something that I've also been quite impressed in seeing. And Alex, I do use Nansen Portfolio quite a bit. So have been looking at all these different random wallets. I still have some random holdings in different places. Really great to have everything coordinated into one spot. So yeah, I'll let Adam share more on his background as well. I think this is my first time talking to Adam in real life. I feel like we've only talked about sushi governance stuff on Twitter.
Yeah, I am a real person, despite what people think. I'm not just a meme. Adam Cochran. I run my own firm called Cinnamon Ventures. Long-term investors in disruptive technologies try to acquire positions in projects that I like, and then get really deeply involved in governance and even code contributions over time as kind of bringing almost an activist investor approach to the space. But most people don't know me for that. They know me for writing egregiously, offensively long tweets and breaking Twitter. And that's kind of how my infamy has come about. So if someone's broken your Twitter feed, it's probably me.
Yeah, I mean, Adam, you kind of released your Monster 2023 shopping list this morning. 268 tweet thread. I don't know
new
how
record
long
for me. Yeah.
New record for you. How long did it take you to type that out? I'm going to share this link to everyone who wants to read this on the chat on Crowdcast. But
yeah.
how
So
long did
I
it
mean,
take you to write that?
this research is like always ongoing, right? I try and for my own sake, every year establish a thesis and take this approach that I call the shopping list approach, because I found when markets really tank, that's not the time you want to be researching to buy, because things are going to, spike back up really quickly. So I always try and establish a shopping list at the start of the year, and I modify it maybe monthly. And it's outlining, here's all the things I want to buy whenever they crash. And I set up alerts for the different tiers. And as I see things crash down, that's when I start to really scoop up, or if the market's depressed, set up a dollar cost average into these projects. So the research is like a constant basis. That's what I do with a lot of my days. The actual writing of this was like a day and a half of just focused writing. And half of that this time was like using Midjourney AI to generate art for the different projects, because I was way too obsessed with that. So the writing process isn't too bad. It's the constant months of research and tracking all these projects to decide what I think is relevant, and looking at the industry to decide what my annual thesis is, that really takes the kind of background time.
Yeah, I think everybody was kind of going through all the tokens that you were mentioning in your tweet thread this morning, and I was like, I noticed Koenig, this token that you mentioned about it being an interesting coin to buy, and then I don't think I've ever seen it trending on CoinGecko before, and then I saw it trending right after you tweeted about it. So I guess everyone's doing the same, just researching the tokens that you have put on your shopping list.
Yeah, that definitely happens every year, and a lot of the virality of these threads is by people like hate retweeting it, either because they hate being forced to read something and don't like long threads, or because they're like, oh, my token isn't in here and is clearly the best, so this entire list is stupid, and I'm going to tweet how stupid it is. So it's a great way to get it out there, is the hatred that fuels social media.
I'm sure you got a lot of hate from your shopping list
Always.
last year because everything went down 80%, 70, 80%.
Yeah, the whole global market blows up and everyone's like, you suck at this. And I'm like, it was a rough year. Yeah, I didn't know there was going to be a war in Russia and stuff like that. But first off, I tell people, don't buy these, do your own research. This is my approach, and it's a shopping list. Don't YOLO into it at the top, right? This isn't financial advice. This isn't go buy it today. This is stuff to monitor on dips. But if we actually take the index, excluding Bitcoin and Ethereum, I inched out the index last year by like a fraction of a percent, like 0.84%. So I'm going to count that as a victory. It's not a good victory, right? But I will count it. Yeah.
Yeah, I noticed your thread this year has a lot more caveats, and I think the first 10 tweets or so, like, this is a shopping list, do your own research, blah 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 blah.
People still won't listen, but I tried my best to really drill it home. This is the approach here, right?
All right. Yeah, I think it took me a long time to read it. Suggest all the other guys who haven't read it yet, go read Adam Cochrane's tweet thread, monster tweet thread. A lot of interesting nuggets in there, I would say. So yeah, guys, let me jump into the questions that I have prepared for everyone today on the state of crypto market. But I guess before looking at the state of crypto markets this year, I think it's kind of important to kind of reflect on what happened last year. A lot of bad things happened last year. I guess we learned a few new things. Some of the key takeaways was kind of avoiding unsustainable Ponzi use, such as on Terra, UST, kind of the importance, or we are reminded again of the importance of storing your own tokens to avoid blowups on centralized platforms such as FTX, BlockFi. I guess, what are some important takeaways that each of you took from last year that maybe were not so obvious, or that you want to share with the rest of us over here? Elwin, you want to go first?
Putting me on the spot.
Okay. I mean, okay. Whoever that is ready. I mean, if you have any lessons, yeah.
So I guess one of the things that I liked, I admit I'm only halfway through your thread, Adam, but I would say that one of the things I've been thinking a lot about as our space kind of matures is having a lot more of this type of relative valuation kind of thought process. I think for several of the projects that you mentioned, Adam, you did kind of benchmark versus competitors or other players in the space. And I think that for us as a launchpad, we also care a lot about trying to make these types of explanations for the regular users. Bobby and I have talked quite a bit about tags and different features inside CoinGecko now that you can more easily filter, all the different, say, Cosmos ecosystem chains and benchmark against them, against each other, right? And that's something that I do kind of want to see more of this space do. And I think that, as evidenced by what Bobby mentioned of some of these teams trending after these mentions, it's very clear that a lot of the power users within the space start to, there are a lot more power users in the space as a whole. Alex, of course, you see this with a lot of the regular degens that maybe come from Pudgy Penguins communities or whatever it might be, to eventually end up being active users of your guys' product. That we obviously see a lot of folks that really do DYOR, right? And I think that as we have kind of looked at kind of market cycles, one of the things that Impossible, we like to segment users into 5 types of user personas, with 5 being the extreme DeFi degen and 1 being like my grandma, who doesn't even invest in stocks, let alone crypto. Like, just money does not really kind of enter her consciousness, if you will. That maybe CeFi users sit in the middle here at like user of persona 3. In bear markets, as what Adam mentioned, why some of this stuff kind of flies right away. One of the things that we've noticed is that in bear markets, the 3 users kind of disappear. A lot of folks may be chasing or in for the speculation or hype, they kind of go dormant. And so the guys that are left still sitting at the tables are the guys that are the 4s and 5s kind of ready to deploy. And then it becomes a bit of a trigger race, if you will. So if you haven't done your research, if you haven't bookmarked all of your stuff on CoinGecko with the little price trigger alerts and things like that, you're not really going to see as much of, the opportunities. And same thing with, watching other large wallets or portfolios that I think Nansen, you guys have a lot of smart money alerts as well. Obviously a lot of this becomes very reflexive very quickly. Once people feel like there's a bit more good positive sentiment or momentum across the market, then people are ready to kind of bandwagon in. So I think that was a good intro by everyone and sharing a bit of what they're kind of already seeing. And I think one of the stats that I was looking at in one of the presentations I did today was that I think the total TVL of stablecoins is still north of 100 billion. So at peak, I think it hit like 120 or something like that. So like from beginning of the year to end of the year, total issuance of stablecoins liquid on a lot of the major chains. I think I'm omitting 1 or 2 chains, but roughly speaking, it didn't fall that much. So even though, the large caps like BTC or ETH, other assets did obviously fall on the entire calendar year, we did see actually quite robust strength in assets staying on chain, which we've never really seen before in bear markets of this size. And that's something that I'd love to hear more of your guys' perspective on, since you guys kind of see the stable coins and proof of reserves, Alex, and whatever it might be. So we'd love to hear more from you guys too.
Maybe one lesson that comes to mind, since you mentioned smart money, Calvin, is that maybe we learned that not all the smart money is really that smart in 2022. I mean, on the one hand, that's kind of hilarious. On the other hand, many of these people that got wiped out were genuinely icons this time last year, right? I think about 3 Arrows, for example, like they were idolized across the board. And so it just shows that risk management seems like a, let's say, meaningful, useful thing to do at any point in time. But crypto bull markets have a tendency to make people forget some basics, right? In many different ways. And I think that's an example of that. And another lesson, I think, for me was that crypto really strayed quite far from its original purpose. With FTX, with Celsius, with 3 Arrows, like these are basically the worst of traditional finance combined with the worst of crypto, right? You have opaqueness, you don't have transparency. So you have the opaqueness of traditional finance, and you have the lack of regulations from crypto, which is a very toxic combination. And so, straying from that original purpose, is something that I think we should just be like, especially those of us who've been in the space for a couple of years, we should just be quite disciplined in trying to keep people grounded in some of these basic things. I would say another lesson is that we've reaffirmed that on-chain is the future, which is a trend that started, I think, I would say in 2020 with DeFi summer, when people started trading more indexes, we started yield farming and so on. But we've kind of come back to on-chain, I think, being the future. And over the next, say, year and multiple years, I think we'll see that trend just continue, even if it's not necessarily always linear, like up and to the right.
Yeah, I don't know if any of these lessons are new or just being like learned by a new audience, because I feel that these are the same lessons that we've had in traditional markets as well. Like, half the comments right now on my thread this year are, oh, these are so boring. These are old shitcoins that aren't exciting and nobody cares about. And it's like, yeah, that's why they're oversold, right? Like, I don't want something that's flashy and exciting. You know what was flashy and exciting last year? Luna and Axie and running on the blockchain and anything 3 Arrows Capital touched and anything FTX touched. That's what was flashy and exciting. That's all gone, right? Like, there's a reason that things that are overlooked, things that are out of the cultural zeitgeist of the moment are good investments at times, is because they aren't exciting. There isn't that froth there. And so hopefully the valuation is like more realistic to its purpose. So I don't know if we'll ever fully learn that. We have this problem of always wanting to have like a figurehead and somebody to follow. And in a decentralized system where good, truly decentralized projects don't have that person. I think it almost makes it easier for scams to come into the place because people want to follow someone. And so these it's just like in the Bitcoin space, because Bitcoin doesn't have a leader who is present anymore, we get these, toxic Bitcoin maxis who, just spew random propaganda, and people worship them because there is like this void. There's this gap that they can't have anybody else to follow, right? My hope is that this starts to, though, as this industry grows, have us kind of pull apart things a little better. And in the stock market, we talk about projects being growth versus value. So like something that doesn't have profitable revenue, but we think is going to grow multiple X in its user base, is a growth stock. It's riskier. We expect it to take off. It's the hype token that might one day make it, right? Whereas value is something that is stable and earns recurring revenue, has profitability, and its value is based on a multiple of the future. I want to see crypto start to evolve into that mindset, that separation of, growth versus value. What is the subjective hype token that we're hopeful for the future, and what is actually capturing real value right now today, and how do we evaluate those? And I think one of the main metrics that is a big gap there is still fully diluted valuation. Because FDV is so important, as you learn when you see tokens like, Serum with a 0.5% of their cap floating around. But at the same time, FDV is not actually comparable between projects because the timeline of that distribution can be different, and the conditions. So something like Convex, which only puts out a new Convex token when it acquires a Curve token for its treasury, is not the same as something that puts out one new token every block, right? Because one of those is only gaining when it makes a capital acquisition cost, and the other is a time-based dilution. So those two FDVs aren't something we can easily compare. And I think the complexity in that makes it really hard for less experienced individuals in this space who aren't maybe full-time investors to really parse those things, because that data doesn't bubble up easily in a comparable fashion. You have to really dig deep and think about the context of those two valuations to compare them.
I think what you just said is super true. I mean, even for those of us who spend full time in crypto, it's just so hard to like get all this information and try to make sense of them. So yeah, what more if you're not full time? And then talk about value versus growth. I think there's one more category of like tokens called meme tokens, I suppose.
I just try and ignore those.
But there was one of the biggest winners in like the cycle, like all the dog coins and all. I mean, we like to avoid it, but like meme tokens are pretty interesting. I mean, it's very hard. There's no fundamentals. It's just all purely based on.
The great irony here is that other than, I started my career at a Bitcoin exchange and owning Bitcoin, and then as a moderator for the Dogecoin subreddit. Like that was my second foray into this space. So even though I preach value, I come from meme-filled beginnings.
Interesting times.
I wonder if there's like a fourth category, which is kind of value meme tokens. So basically meme tokens that tend to exist, and they thrive, they do well over time. Like I would actually say maybe Dogecoin is an example of it. It's not a meme coin that kind of goes up and disappears the next week. I would argue maybe some of the NFT collections would fall into that category too. Like there's no intrinsic value, but there's a kind of community value in them. So of course, Pudgy Penguins would be my go-to example for a value meme NFT collection.
I think that's just either a growth or a value stock that has good branding, right? Like community experience is value. Like people pay to be a part of that. The entertainment industry, the fashion industry, those are all examples of us, actually generating value based on our emotion of being part of a collective. And I think that's a legitimate use case. That's totally fine, right? And so I do think there are some meme tokens that we cast off as meme tokens that are actually like more entertainment, right? They let us feel a part of something. And in an isolated world, especially now where people are like so alone and disconnected and dispersed, that is value. That is real.
I feel like every cycle, the crypto ecosystem gets more complex. I mean, we used to have like Bitcoin and Litecoin and like POW Fox as kind of a comparable of which token to buy and invest. And then we have Ethereum, and then soon we have the ERC20 tokens on top of it to pick and choose. Now we have multiple different layer ones, layer twos to pick and choose, and then the tokens on top of it to kind of pick and choose. And now in this cycle, we also have NFTs that comes into play. So maybe Adam's going to add NFTs into his monster list for next year. Because
I almost added them this year. I have a short list. I was running out of time, but it came close. So I think next year will be the debut.
Because like, you have fungible tokens like NFTs. I mean, the returns from like buying an ape or a punk from 2 years ago would have like far outpaced any other fungible tokens, for example. And then who knows if that's going to be the next big run the next cycle, but who knows, right? But what do you think is going to be the next narrative, the next thesis, next catalyst for the next bull cycle? Like there's so many different things. I mean, maybe it's unclear yet, maybe it's clear to some of you. You have some early inkling. But what do you think is going to be the important catalyst for 2023, 2024, in your opinion?
I feel like we should put Calvin on the spot again.
I've got a few. I'm just trying to figure out which one I can get the most chiming in from you guys on. Maybe I'll take a light one first, which is I still think that to play devil's advocate here, I think that I don't like just kind of looking at things that failed last year and just kind of ignoring them. In fact, I think one of the things that I spend a lot of time in and try to train a lot of our impossible guys to do is to actually learn from the good things that mistakes make. It sounds a little bit counterintuitive, but I think there's things that can be valuable lessons that can be taken out of the step-ins, axes, terras, so on and so forth. So the one that I thought was quite interesting is that we just kind of let slide that, Solana went down many times last year, whereas despite all of the kind of wacky shenanigans happening in Terra, minting such supply and so many users, Terra did bring up I think more than like 1 million downloads to Cosmos wallets. So for non-EVMs, we very rarely see so much adoption, especially on the wallet side and regular user side. Obviously some devs go over to some of these new chains, but very rarely that scale of user. So one of the narratives that we're kind of curious about is where or how do users kind of accrue to some of these other non-EVM chains. And so I know, Adam, in your thread, you mentioned both Cosmos and Agoric, but then you also brought up this FTV side of things as well, which I'm also kind of curious. Within the sector of Cosmos ecosystem, for us, Impossible did do a Launchpad project back in July for another team that will be launching their mainnet called Aura Network, which is also a Cosmos-based chain, not to be confused with Aura Finance, the balancer product. But that in general, we're quite interested in the sector, but I would love to kind of hear or understand a bit more of the Adam methodology of trying to say, okay, well, now that I like something like Cosmos or this Cosmos sector, there are a lot of different plays that may come from it. I saw, in your mention of like ZK side of things, you see that people are excited about, say, Polygon ZK EVM. So then you found another proxy bet of betting on Zcash, for example. So I like this kind of train of thought, and I'd love to see how maybe you guys are thinking more about other Cosmos things. And then also, if Alex, you're seeing anything within some of these other Cosmos chains that you guys have supported. I know Apeboard, one of the first things I used back before I joined you guys, was actually to track Terra holdings. Even though I didn't have any Terra holdings, I knew that they were one of the fastest to integrate some of these Cosmos-based chains. And so, as we know, obviously from the EVM side of the world, a lot of stuff is quite interoperable. Solidity devs can kind of move to and from any of these chains and deploy stuff. And I think the next closest ecosystem that we've seen in terms of kind of compatibility and reusability of a lot of the code would be some of the Cosmos ecosystem. So yeah, maybe Adam first, and then we'll love to hear Alex's point.
I like how we were asked a question and Calvin turns it around and is like, I'm gonna maybe kind of answer, but now I'm gonna become a co-host. This is great strategy. So in terms of the list, I think first off, there are a whole bunch of tokens that I like and that I own a bunch of that aren't on the list because I don't think the risk reward ratio is there right now. Right. So like there's other stuff in the Cosmos ecosystem that I own some of. There's a ton of EVM stuff that I own some of. I own a bunch of Solana because I thought it was ridiculously oversold, but now, it's popped up a ton. I don't know where it goes from here, so it's not on the list kind of thing. When I look at things for on the list and exploring new ecosystems, I totally agree with this concept that like just because something blew up doesn't mean there's not something of value there, right? Like I do think the takeaway from the Luna fiasco is around wallets, right? Like how do you get people onboarded and over the friction of a wallet setup and an install, right? For what it's worth, I think this is like MetaMask is done, right? Like long term, they've dropped the ball, they've lost the lead. I think we're going to start seeing way more competition from other wallets, and I think wallets are getting wise to the fact that if they can do multiple protocols, that is the way to like side get users. So as we see Backpack and Phantom from Solana start to support EVM, I think that's how you get a lot of EVM users over into a Solana ecosystem. I think there's like this is like side loading, a little hack backdoor to kind of get users shifting over.
I'd add some regional stuff to that thesis as well. At Binance, we obviously acquired Trust Wallet back in the day, but then also Coin98 was another launch pad that we did in Vietnam. I do think that there's also some regional stuff, especially if there's some language barriers as well. Just the user patterns and behaviors that people are familiar with in some of these regions is a little bit different. And I think that...
And them getting priced out of mainstream EVM is a big thing, right? So they do look for other options more aggressively.
They can't afford ETH mainnet for sure. So then they will consider a lot of these other more scalable chains as well.
On your FDV side, looking at that at Cosmos, one of the things is really the validator economics there, right? Like because it's so focused on that staking model, right? Part of it is if I'm buying in here and I know I'm going to get diluted, am I making up for that in staking and being a validator, right? And so I think the kind of Cosmos network chains, unless you delegate your stake or can be a validator yourself, the economics get tough. Like that's not an ecosystem to buy and hold, right? Because a lot of those times you will face dilution. But whenever I'm exploring a use case, if I think there is, I usually end up buying some of the pack leader. But then when I look at a thing like this on the list, I'm like, who's also executing on this? Who is underwhelming to the average user, oversold, the dark horse in the race, because it's VC Moneyball, right? Like if you can find 100x, that means you only have to be right 1% of the time to, cover all those other losses. And so I think as you start to look at the dark horses in the race, you'll find one or two in every space that is compelling and has a really good shot and unique take, but they've kind of been battered down a little bit or overlooked. And then I also look for what's novel, because I think, especially when we get into L1s and sidechains, I don't think you're going to win by building, there's the quote by Henry Ford. If I asked people what they wanted at the time, they would have told me faster horses, right? You're not going to win this race by building faster horses. You're going to win this race by building a car. But all we're seeing is a lot of faster horses. How do we get EVM faster? How do we roll up better? How do we execute cheaper? I don't care, right? I think that race is won. I think Ethereum will be that mainstream EVM settlement layer. So you have to have something that is a really unique competitive value prop for me to get interested in another L1, because the threshold to get the user to download that wallet is much higher, right? Now that they've got an EVM, that you have to have something really compelling to get them over that hurdle. And I think that comes from a large uniqueness factor.
Yeah, I mean, one difference I think with this cycle versus the last one is in 2018 you had a few other blockchains that people thought they were the infamous Ethereum killers, and basically no one ended up actually using things like EOS in the long run. I think this time is a little bit different actually, because I saw certain ETH maxis, like hoping to have that same narrative play out again. But I don't think that's actually happening this time around. It seems like the other smart contract platforms are actually a lot more robust. Their ecosystems are a lot more robust. And so that means, sure, the native tokens might take a beating, and they have. But it looks like the developer communities, the users are actually going to stick around in many cases, not all, of course. So I think, to me, this whole cycle has kind of reinforced the idea that, sure, I do think Ethereum is the clear leader, but the future is going to be multi-chain, in my view, and you probably will end up in a world where you have an expansion, meaning you have lots of different chains, lots of different models that will be tried out, and then there's going to be a phase of consolidation in the future where different chains carve out their own different niches that optimize for different things. And so it'll be really interesting, I think, to see what happens with the whole Cosmos ecosystem, like we just touched upon, Solana, and of course some of these other new chains that will launch. I guess the other thing is, of course, the whole L2 narrative will this year probably actually play out, right? There seems to be some traction. I'm still undecided on whether it's good for the Ethereum ecosystem to have so many different L2s, because you might just end up kind of dividing and conquering in a negative meaning, where you'll have just too much dApps and users and liquidity be split across lots of different L2s. But yeah, I mean, the whole multi-chain thesis for me has been solidified in this thesis, both on the way up and on the way down still.
Yeah, I definitely agree. Multi-chain's here to stay. I think Cosmos has been an interesting ecosystem. I mean, Kelvin mentioned it. Adam has a few Cosmos gems in his thread. It almost feels to me that, I mean, Cosmos is not new. It's been around for a few years. It's similar. After reading Adam's thread this morning, it's starting to dawn on me that I should probably start spending more time digging deeper into the ecosystem, because for all I know, it could be like how NFT exploded in 2021. NFT is not new; it's been around in 2018. But that being said, the early players in the NFT space may not necessarily be the winners when the bull run comes by. Like CryptoKitties has been around. If you bought one of the rarest CryptoKitties, you probably would not have made much money in the 2021 bull run. But I mean, if you held on to a Punk, which was also one of the earliest one, you have 10x your money, for example. So I think there's probably because if you look at it, like, I mean, EVM's kind of, everyone's talking at EVM. What's something that is kind of underrated but has a potential run up? So Cosmos seems like it fits that narrative, but I don't know. It's been around for a few years. I mean, it's been like talked down multiple times.
I'll show a CoinGecko stat here, because I was diving deeper into Cosmos over the holidays as well. And so Cosmos launched on March 14th, 2019. At that time, on day one, its implied FDV would have put it into the top 25. Obviously, it wasn't liquid at that point in time, but of those 25 in 2019, that were the top 25. Do you know how many of them are still in the top 25 today? So 3 years, effectively.
I don't know, 0.
It's got to be only 4 or 5.
So it's 10, but obviously that includes BTC, ETH, and like the stable coins that are in the top 25. In the top 25. So not that many project teams actually managed to maintain their positions. And I think this kind of ties to what Alex mentioned about the downfall of Ethereum killers in last cycle, that it's just really, really hard to live up to expectations when you have such a high valuation. But that, like I said earlier about the stablecoin issuance, that the stablecoin issuance now is able to actually support a much more robust kind of buy pressure that just exists out there. And so that is something that I think, if you think about crypto as almost like an emerging nation that has now some sort of national wealth that it has to be able to buy the dips on things, I think it is also harder for even zombie chains to die, because there's still some assets somewhere that people can use to buy it up, any perceived dip.
Yeah, I was talking to Imran from Alliance DAO a couple of weeks ago. made a visit to KL and I had a chat with him. He was telling me that one of the things that will most likely play out in the next 1 or 2 years is the wallet wars. So just like how Adam talked about MetaMask being done for, he thinks that there will be a lot of competitors building wallets, trying to make the user onboarding better, safer, and for everyone. I mean, storing a 12 or 24 word seed on a piece of paper, like, it's not really the safest thing to do. I mean, it's very easy to say store it somewhere, but first, it's actually really hard onboarding. It's a pain in the ass to kind of write that 12 words down somewhere. Most people just put it on a Google Drive somewhere and then lose their seed phrase or like got it exposed. But I mean, storing it properly and then it's just a pain. I think wallets such as Argent is interesting, but I think there's a few other things that have came out. I think some account abstraction stuff coming out of Ethereum that could potentially restart the wallet games for everyone. So I think it'd be interesting to see how MetaMask, if they could adapt to the incoming on competition, or how are the smaller guys coming in, because whoever owns the user layer on the front, I mean, that's kind of like the gateway to the dApps, will be able to control a lot of the flow for the user. And I think even large dApps such as MetaMask, Uniswap and OpenSea will probably look at this as a threat, especially for exchange, for example. Like, MetaMask has kind of demonstrated there could be a business model to it from the swap functionality, and they could, for example, choose not to route swaps to Uniswap, and that will be a major problem for Uniswap. And I think it will get more competitive once we start seeing wallets launching tokens. So imagine if, and MetaMask may not want to launch their tokens yet, but it could be a case like the SushiSwap and Uniswap, where SushiSwap launched their token first, and then Uniswap's forced to be a fast follower and launch their tokens, or they may cede more market share to SushiSwap. So we may see a case, I don't know, like some of the tokens launching a wallet launching a token, and then starts getting a lot significant market share, and then MetaMask kind of forced to follow and adapt and so on. So that's kind of my take. Wallets would be an interesting space to watch. I think the other interesting thing that I'm kind of watching as well are the NFTs. There's so many NFT projects that have raised multi-million dollars at, like, I don't know, close to $1 billion valuation. And all these guys have sort of promised that a token's incoming. So kind of similar to the BAYC game, like they might airdrop a token to their holders, and then everything's kind of depressed at this point in time. But I mean, I think towards the end of 2023, 2024, like, that's probably kind of my take on things being run up on at that time in time, because Bitcoin halving is happening in, I think, March or April 2024, and that's kind of a good time to kind of see the bull run take place.
I completely agree with your thesis on wallet, but I think it might extend beyond just wallets to like anything that's a gateway or a interface for users. So I would include also blockchain explorers. I would include analytics products, portfolio trackers, if I may, because as you get more multi-chain and more multi-layered with L2s, and there's going to be a bunch of them that are going to either be launched or going to get more usage this year, it gets much harder to navigate, right, for users. And so that means you can probably accrue a lot of value to the front end, because the front end, if it is able to consolidate all these different protocols and chains in one place, that's a pretty powerful position to be in. So I totally agree with you, but I don't think it's only wallets. I think it's other types of interfaces as well.
I think, unfortunately, the dark horse there is going to be centralized exchanges, giving you an easy way to access DeFi in a Web 2 style experience, because the reality is most users aren't ready for DeFi, right? Like, most users, they use a mutual fund to buy stocks, because if you drop them in front of a trading window, they have no idea what's going on, right? They're not ready for DeFi, but they might want it. They might want NFTs. They might want these kinds of things. I think we're going to end up seeing a lot of wrappers over it that are simplifications and abstractions in that manner, right? Like, what's the Robin Hood of this, what's the Robin Hood of DeFi liquidity pools, right? How do you abstract that down to the lowest common UX denominator?
Yeah, probably also the lines between centralized exchanges and L2s might blur a little bit. I mean, Binance kind of has already done that a bit with BNB Chain and Binance the Exchange. And if you think about it, an exchange is just a very crappy and not transparent L2 in some ways. whereas L2s are very flexible exchanges, if you will, that you can create dApps on and stuff like that. Right. Yeah. So I think the lines will blur a little bit this year on L2s and exchanges.
Yeah, it's an opaque L2 with no particular roll up or other types of truing up of all balances, right? Except for third-party proof of reserves, right? With you guys.
Co-host Calvin, what's your next question?
I was actually going to chime in a bit because I was reading a bit more on the social side of things as well. And I think, Alex, you're spot on in terms of like kind of being the gateway. A phrase I've been using is that I think crypto, we've got way more products now that people can actually use, that I think we're getting close to the behavior where like sometimes you wake up in the morning, you don't know what to eat. You just open the fridge anyways, even if the fridge is empty, because you've learned this habit is that there's food in the fridge. I think there's dApps in the DeFi world, right? Or there's dApps and NFTs and other stuff that people can play with, so that even when your brain is like ready to shut down, you can still look at a picture of a pudgy penguin. You're going to open OpenSea, right? And that type of like shift in user behavior is something that I think we definitely saw in the CeFi world back then, in the kind of depths of bear market last cycle, that people would still open Binance just be like, oh, what's BTC price or ETH price today, right? That learned behavior. Same thing I'm sure Bobby has seen, from all of the, this is year 9 now of CoinGecko, if I'm not mistaken. Seeing all of these people still want to come back and check prices and see this. It's that learned behavior. I think we just see a lot more of that now with so many different products out there.
They're just logging into CoinGecko to get their daily candies.
Yeah,
this is a reminder to everybody on the stream. Go collect your CoinGecko candies for the day. Got to be a whale. No, I think you're right in that it'll become behavioral, and there's interesting things in the NFT layer. To shill a portfolio company, Flip.xyz, building the NFT tracker and looking at what becomes the social layer of this space. And I've advocated to NFT portfolio trackers and other portfolio trackers, and I'll advocate to Alex, even though I don't own any equity in him yet because he hasn't sold me any. I think that the winner in that space is going to be whoever can figure out how to be the Facebook or the Twitter of this space, right? Like, I don't know if the financial side of it, the DeFi side of it makes sense, but I think an NFT ecosystem where I'm looking at a stream of other pudgy penguins posting their comments, right? And connecting with groups in common NFTs and sharing what they're doing and sharing updates. I think there's a social network effect that can be made there, which you can monetize both through, APIs plugging into NFT marketplaces, but then also through advertising, right? In a graceful, non-privacy invasive way, like target pudgy penguins who have done or interacted with Uniswap on their wallet, right? And I don't need to know anything about them. I don't need to collect their data. I just can target based on on-chain conditions. And I think that's a really powerful thing. But that social behavior, that interaction, that feeling part of something, that, dopamine hit that we want, right? Like, I post egregious Twitter threads. We know why. I like it when people hit that like button, right? I keep coming back. It's an addiction. I think crafting something like that in this space is going to be incredibly powerful. But I think there's very few people exploring that avenue because it's really hard to kickstart, right? It's a challenging double-sided market problem.
Yeah, Impossible actually has a Impossible Quest product as well that's similar to that, and just trying to get people like understand and try other products and things like that. And it's an often requested type of feature for project teams to want to be able to do a little bit more targeted sale, if you will. That a DEX, in theory, even from both legal reasons and trying to say I'm actually selling a utility token, not just a speculative asset. If you're saying that you're selling it to people that have already proven that they use a DEX, you're much more clearly trying to target users rather than speculators. And I think there's a lot of really great merits to different designs that incorporate some of that. And I think that's something that we're excited to do more of. I think we've actually offered it, for example, that like Lobster DAO, Lobs token NFT holders can get some whitelist allocations in Impossible sales and things like that. We did have a call with Luca once on the Pudgy Penguin side as well. And I think this is also where I think I respect a lot of how Pudgy's built up the brand, but I can say that they actually said we don't want to officially endorse things like this. If you do it in the public, do it in the public, but we're not going to officially put any kind of stamp of approval on this type of thing. And I think that's the beauty of a lot of this space, right? But I do think as well, in the line of what Adam mentioned as well, in terms of like creating more of these types of infra for people to explore these things like NFTs. I also have been really impressed with some NFT lending data. So we have a dashboard on Doing Analytics that I think if you just search NFT lending, it should be the first one that shows up. That one has actually been one of the most starred dashboards on Dune ever, which means that other people are also reading in on NFT lending and other infra. But one of the interesting things was that even as the market was kind of going down at the end of last year, NFT lending and other kind of NFT activity actually wasn't so badly impacted. Maybe people need more loans and don't want to sell their cute JPEGs, so then they use these as loans. But I think the bigger kind of story is that I think since August, actually the NFT lending activity has actually bounced up quite a bit more than basically everything else in the market. And that, again, kind of leads us to a bit of a thesis that we ourselves at Impossible have been calling, maybe this is the year of immersion, to try and keep people within the ecosystem just doing stuff, whatever it might be. Maybe there will be people that use NFT lending product before they use a lending product, right? Like an Aave compound. Maybe they use a funner thing than a super hardcore ZK, whatever, homomorphic encryption stuff, right? But this kind of ties a bit to what Alex mentioned of the kind of front ends being that onboarding kind of ramp for a lot of users. I also think that different types of products will be like the baby version or the easy version of stuff, so that people start thinking a lot more of or getting more familiar with these types of general business models, and maybe they work their way up from the tricycle to a bicycle, right, eventually.
Yeah, I think the nature of crypto is that the market's expanding very rapidly, and then every single groups of users that come in, they may have a different user profile, as you may. They may be interested in different things. I mean, some people are interested in trading. Some people are interested in degen shitcoin trading. Some people are maybe interested in NFT art because they like collecting art. Some people like trading NFTs instead of fungible tokens. Some people like music NFTs, something that wasn't around just a few years ago. People are talking about it, and many different things. And then I think that the fungible, the composability nature of crypto makes it, of DeFi makes it helpful. I think the fact that everything's open source makes it very easy to copy paste and innovate on top of it. So the bulk of the work is done. I think start seeing people, initially, to launch your own chain back in those, your own POW chain was really tough back then. But now then people start launching their own tokens, and then layer on layer 1 or layer 2. One thing that surprised me in 2022 was how the multi-chain narrative expanded so rapidly. So one of the things that we started doing at CoinGecko is we started tracking on-chain data via geckoterminal.com. And what surprised me was in the 1 year that we started doing this, we now track 78 layer 1s, layer 2s, mostly EVM clones. And out of those, there's 400 over different DEXs, mostly Uniswap V2 clones. But there are some minor changes between some of them. But just there's just so many. There's over 1 million tokens. Liquidity is spread all across the different places. So I think NFT project have the same thing as well. It's just all across. Everyone's copy pasting everything and building things on top of it. I think.
We've got the Uni V3 license coming in April
soon,
as
right?
well.
April.
So that might open another wave of lots of different forks and whatever it might be too.
Which is good. That's how we get innovation, right?
Yeah, and Uni V4 soon as well. Yeah, so I guess we're running out of time. Got a last few minutes. So before we end the session today, a lot of us have been chiming in on top of each other. So it's a very interactive session. Anything that you guys, any final take on what do you think the market's going to be in 2023? We've got a mini bull run now since the start of the year. I don't know what's your take. Is it a bull trap, but more broadly, what do you think the year is going to look like till the end of the year,
I guess I'll go first. I think 2023 will be the year of PvP because it rhymes. But more seriously, I think in terms of a cycle, it's very similar to 2019. It was kind of the year after we had this terrible bear market in 2018. Things were very quiet, but this time around, you have a lot more builders and actual products that are going to compete for market share in different categories. So that's one element of PvP. When I say that, you might not expect to grow your user numbers or liquidity metrics or whatever it is in absolute terms. So you're going to have to fight for market share. And that could get quite bloody and messy in different ways. But I think it's something that most founders hopefully are aware of. But the other element is you have lawsuits hanging over us with the whole DCG stuff, FTX, like liquidation processes, and that's going to be quite messy. And you already see a lot of the stuff on Twitter with the Winklevoss brothers like tweeting at Barry Silbert and all that stuff. And then there's going to be a lot of M&A activity because many companies will run out of money. Teams will run out of money that raised in 2021 or even maybe in 2022 as well. So that creates a really interesting environment. I think people like Adam are going to thrive because your ability to actually research and analyze will be heavily rewarded, because I think there's going to be pockets of stuff mooning, pockets of things doing really well, but it's not going to be a market where you can just buy anything and it'll moon like in 2021, for example, or 2020, depending on which sector. So I think it's actually a great year potentially for smart people who put in the work of doing research, but it will probably be quite messy and bloody also. So that's my take.
I'll give you a new phrase for this: REV, research extractable value, and maybe that's where tools like all of the great platforms, CoinGecko, Nansen, so on and so forth, can really capture a lot of value, because you do then allow the individual to also have as much information at your guys' fingertips, as a large firm or whatever it might be.
Yeah, this year is, in the traditional markets, we talk about it being a stock picker's market, right? Like buying a broad index is not going to be successful. You really have to dig deep and find the gems. We've had a 15 or 20 year regime of free money in the American economic system that has fueled growth startups to unreasonable levels. And now we have, bond rates where the risk-free capital reward is like near 4%, which is insane. I never thought we would see it again in our lifetime. The reality is that I don't think the growth story here recovers without a strong and stable recovery in the stock market, just because of the sheer volume of capital that gets absorbed out from venture LPs and institutions and things like that. I am not as convinced as most people that the worst is over in terms of that. I think the Fed does probably continue hiking, and I think they probably stay at an elevated rate for a longer time because they lost credibility in responding so slowly. They are willing to damage the economy a little bit to return that credibility, because it's actually something important for them to be able to do their job, that you believe them when they say things. And right now we don't, right? They're arguing with the bond market and we do not believe them. And so they need to beat us until we do. I do think there will be things in crypto that outperform and continue to grow. And I think you have to look for those distressed pockets and really understand what's going well. But I don't think like meme coins and growth coins and things that aren't profitable or don't have a big user base are going to be sustainable yet. That doesn't mean it's not the time to accumulate some of them. I don't know after this run up if it's necessarily the right time to deploy all the dry powder, right? I don't think we have a sustainability here. But when things start to move, when we start to see that glimmer of hope in the real markets again, things are going to move fast, like incredibly fast. And I think that's why we see bear market rallies like this, where there's so much dry powder. No one wants to get left behind because they know how fast it will move. So if things move out of bounds even a little bit, everybody chases it and drives up the market beyond reasonable levels. So I think as we get through this next year, we will see a lot of building and we will see a lot of opportunity emerging. And what we've seen is every bear market, both in traditional and in crypto, some of the most successful companies of all time come out of building in bear markets. They're the ones who were either founded in a bear market or really doubled down and reevaluated in a bear market. And they've become huge successes because they still have that growth story and they're ready to capitalize on it when the moment comes. But they have the regimen to build profitable cash flow businesses and focus on what's important. So I think now is the time to dig in, to understand things when there isn't the noise and chaos of chasing the big ball of money in a bull market, because that's a lot of sleepless nights. Now is the time to figure out what is building, what is real, what are products people are going to use. Because I'm as bullish as ever on a 5-year time horizon. On a multi-year time horizon, I think blockchain technology becomes as ubiquitous as the internet, right? But people forget that we started the internet in the 70s, right? And it became ubiquitous late 2010s, right? Like even in the early 2000s, we had the internet, but now we are always on the internet. It's every part of our daily life, right? The ubiquity came when we abstracted it down to be on cell phones and to have WordPress so that everybody could make a website, right? Like it became something more. We're not there yet. Technology takes a long time to build, right? We're 5 years into this space in terms of the EVM platforms, right? We're 10 years into this space in terms of blockchains in general. That's a fraction of it. So I'm as bullish as ever on a long term. I think this is it. This is the next internet. This is the best thing since sliced bread. But I don't have that level of conviction for everything in this next coming year. I think you have to be careful in your bets and willing to hold drawdowns on things that you believe are long term. Don't chase short-sighted profits, because I don't think those hold, right? It's too choppy. Focus on what you believe changes the world a decade from now.
Wise words. Yeah, the 100x returns are all here. I believe the strongest teams are out here building. It's just a matter of like finding the right team that has the right narrative, the right product, the right fit for the next 5 years. The previous winners of the past cycles have been there building underground. The DeFi groundwork was laid in 2018, 2019. It was all in front for all of us to buy it. It's just us trying to do our research and determining and having the conviction, I suppose, more importantly, to buy in size and to hold through those choppy times, because there will be choppy times ahead.
People give me flack on having some things in my list from last year that are -70 or more. I still hold those tokens. I'm still buying those tokens, right? To take a hit that big requires incredible conviction, but this market's volatility will shake you out if you don't believe in what you're buying, right? Like you can't just chase for the profits, because this market is volatile enough that it will make you question everything. So you have to believe in what you are buying strongly enough that the conviction is, hey, if it's down 90%, great, I got a discount. I will convert any hedging I had to dry powder and, bring my average entry price down, because this is what changes the world, right? Like you have to have that level of conviction to buy in this space, or some hunt stop market maker will push you out of your position.
And you got a lot of dry powder. They constantly buy the tips.
Yeah, maybe not everyone has that level of dry powder, but for us at Impossible, we've been working on trying to do different things like buyback protection programs and other types of things. I'm sure you see on the centralized exchanges, they have these types of, and other DEX protocols now have these types of like no liquidation types of products that allow you to have some, larger exposure without needing to put everything. You can isolate stuff into these types of positions. For us on the buyback protection program, it effectively bundles a put option into anything that you buy on Impossible as well. We're trying to see, I think, as we see more of these DeFi primitives out there and more things to kind of reduce the tail risks of extinction or liquidation, as what Adam is hinting at. For the regular user, there's still, I think, a lot of education that needs to be done. And so for us, this year will be a lot of education work that we need to do to help a lot of users kind of understand what's happening within the space, read up and do their research as much as possible, read all the threads out there, whatever it might be. And I think we 100% agree here at Impossible with what Alex mentioned about the 2019 being the year after the kind of bloodshed. It's very clear that this year was 2022 was definitely bloodshed. And this year maybe will be a bit of a calm after that storm. But it is something where, as Bobby mentioned, with 2024 Bitcoin halving, that was obviously one of the other kind of nice catalysts that helped pour some more fuel on the fire last time around. And so hopefully we'll see some similar stuff like that as well. So pretty excited about all the different technical innovations as well. I think Bobby mentioned the L2s. A lot of them may also be launching tokens as well. I think Alex mentioned, this next wave that can also happen. The wallets, like we said, of if MetaMask launches a token, we all basically get a big stimulus check. Right? So for us, as long as we keep on, putting our heads down and building, and I think for you guys in the audience and just kind of continuing to read up and doing your own research, I think that's the only thing you can do yourself to a favor to prepare yourself for.
All right. Thank you very much, my co-host Kelvin. I think that wraps up perfectly for us. And thank you very much, Adam, Alex, for joining us today on our virtual meetup. I think this meetup is sponsored by KuCoin, so thank you for sponsoring it. Lastly, we have, if you're interested in a promo code, we have CoinGecko5 to get $5 off the CoinGecko store, anything on the CoinGecko store if you're interested. So yeah, I think that wraps up our session today, the virtual meetup. Started with Zhong on the annual crypto report that we prepared at CoinGecko, followed by the State of Crypto Market 2023. Thank you very much, Adam, Kelvin, Alex.
Thanks for having us, Bobby.
And more importantly, thank you all for attending this virtual meetup. Thank you, guys.